Alright, so welcome back to another video of finding value stocks. So this time I'm going to be looking at copper miners. So copper demand is going up due to EVs, construction, and just in general higher electronics demand. And the copper price has been going up. It basically doubled in 2020 and 2021. So we're going to be looking at copper miners. This is going to give you an inflation hedge. The mine development stages increase the price of the stock. So this is another tailwind for this. So we're going to be going over value metrics. These are things like total resource reserve equivalent to enterprise value, and then things like net present value or net asset value to enterprise value. And I'm going to show you the stock that I found that's a good buying opportunity, and it's actually gotten better since I've analyzed it because the price has actually come down some. But there's a chance to like quadruple to 8x your money. So we're going to be looking at that one. I'm going to show you a spreadsheet, and then I'm going to show you the presentation of the company that I found from the spreadsheet. So let's check it out.
Oh yeah, one thing that happened recently I forgot to mention in the intro was the stock price dropped a lot, but the company came out and said that there's been no material changes in their business and they don't know why this recent trading activity has happened. So I took that as a good sign. I mean, my analysis is still the same. They're saying they don't know why that happened, and that their business hasn't changed. So that hasn't changed my decision, and I actually think it's a good place to buy more because it's cheaper now. Alright, so we're back for another episode. I'm going to show you how I found value stocks in copper mining companies. I did this analysis back in March. So the way me and a group, we looked at all the copper miners that we could find. We mostly focused on US and basically in North or South America. So we put all the miners here, put their stock, ticker symbol, market cap, exchange, diluted share count, and then basically on these next columns, we're trying to calculate the value to copper reserves and to find which companies are undervalued relative to the value of the copper in the ground they have. So basically we put in some information just to get a feel of the company, to see if there's any major issues. So long-term debt, cash, enterprise value, the location. We looked at what stage of development they're in. So are they exploring? Are they just in development? Are they in development, or are they actually producing copper? Then so all this is units of billions of pounds. So that's sort of a standard unit for copper. So we looked at proven reserves, probable reserves, measured, indicated, and inferred. And then what we did is we wanted to use these numbers to come up with a total resource reserve equivalent. So that's over here. And the way you do that is basically you take a weighted average. So I'm showing the formula here. You take a weighted average of these different reserve numbers. So basically these different reserve numbers are the confidence the company has in the copper measurement that they're making. So I have sort of a graph down here of it. So a measured copper reserve is sort of the smallest amount. This is something that they have very high confidence that this is in the ground. Then they have indicated, so they might have drilled some drilled wells to test what type of rock is there, and other sort of less intrusive measurement methods. And then inferred is they say, okay, well, we know we have copper here and we know the rock structure. We're going to guess that this continues for so much more, so much more depth and width around the site. So you can see this, the measured is the most confirmed, indicated is less confirmed, and inferred is sort of an estimate of what they think could be there. So you're going to take a weighted average of these based on that knowledge of how sure the reserve is. And so these are the ratios we used. We used the same ratios for every company, just to keep them equal, and so that you can compare them. And so that gives us a total resource equivalent in billions of pounds. Then we calculated the enterprise value of the stock. So in order to do that, we took we have a website that gives us enterprise value. So we take those two numbers, the total resource reserve equivalent and the enterprise value, and we divided them to give us a ratio, and then I divided it by a billion, I think. Let's see, a million or a billion? Divided by a million, just to make the numbers a little more manageable. Alright, yeah, so this is in millions of dollars. So what this tells you is how much the company is valued per pound of copper, right? So this company, Taseko, is at 70, and then Turquise Hill is at 100, right? So these guys are valued more per pound of copper. Now that might mean their copper is more secure, so the reserve is more well known, but for some reason the market is valuing this company higher. But we're looking for value, so we want to find the lowest numbers here. So Ero Copper, definitely not, that's the highest. So we come up with Western Copper, Excelsior Mining, and Excelsior Mining. So those were the two that my group decided to investigate further. And so there's also another way to value these and find value based on the net present value or the net asset value. And so this number is given to you by the company in estimates that they put out. And then you can do a similar thing of you do enterprise value divided by net present value to see how high the market is valuing this company. And again, you come up with a similar result. You get that Excelsior and Western Copper are very undervalued. So we decided to look more into those, and I'll show you what we found. Alright, so this is my presentation on copper mining, which I produced this after looking at those two companies we found in the spreadsheet. And so this is showing the long-term demand for copper. So the orange line here is the demand. It's just continuing to go up. This is brought on by more electric vehicles, more electronics, construction, all these types of things cause the copper demand to increase. And as you can see, the spot price of copper in 2020 has gone almost double, right? So we've gone from $2 at the lowest to $4 here. So this helps the copper mining stocks. It gives them a boost. So besides coming online and going into production, also this demand and inflation increases helps the price of these stocks. So if you want a safe bet, you can probably just buy the copper mining ETF. Just due to demand and inflation, you're going to do well. But we really are looking for value stocks. So my main pick is Excelsior Mining. So as you can see, their stock price has not benefited from this increase in the price of copper. Where if you look at a lot of the other copper miners, their stock has gone up due to this increase in price. So these guys are still very new. They call themselves America's newest copper producer. Okay, they're also doing very eco-friendly copper mining. We're going to show that soon. And this is, it's hard to see, but this is an 18-wheeler. They said it's filled to the maximum load it can handle with copper back here. So they're actually producing copper plates currently. I think they've produced over 230,000 pounds of copper, but they're still ramping up their production and bringing it online. And we're going to talk about any issues they're having in a second. So this is just, again, a copy of that spreadsheet showing that Excelsior is one of the lowest, or shows that it could provide the highest value return. They have institutional shareholders. They have backing of these major base metal institutions. So this is just more good news. The fully diluted shares is going to be 330 million. But let's talk about the issues they're having. So this is a new mining company, and well, let's talk about how they produce copper first. So they're not a traditional copper mining company where they have a big pit in the ground. They're different in that they have wells. They have an array of wells drilled in a field where there's underground permeable rock that also has copper in the pores of the rock. So by pumping some acidic liquid, basically water with a little bit of acid, they can etch this copper off the rock and then recover it from a nearby well. So you can see this is the pattern of wells they have. So when they first started this up, they found a few issues. So their pumps were being blocked by this mineral precipitation. They were able to solve that. So the good news is they've come up with solutions for every problem they've had so far. So you have this problem with pumps being blocked, and now they changed their wells so that they actually switch each well between injection and recovery back and forth, so that whenever the recovery well starts to get a buildup, they actually flush it back the other way with new acid and dissolve it. And so you can see it got so blocked that the pump was actually collapsing in on itself. But with this new solution, they haven't had this issue anymore. The current issue that they're working on, but it's getting better and they've figured out a good solution for it, is CO2 gas. So you can see there's copper on this rock. So this is a sample of the rock they're mining. But there's also this white calcite. And this calcite, whenever you put the acid into the ground, produces CO2 gas. And that gas reduces the flow rate of the water acid mix through the rock. So that basically means their recovery rate is going down. So they had to solve this, and what they figured out is if they stop pumping the acid and just pump fresh water through to get rid of these CO2 bubbles, they can actually recover the flow rate of the wells. So you can see they have a graph of they were recovering and they saw the rate drop off, and then when they start to pump fresh water, the flow rate comes back up. Then they pump acid again, the flow rate goes down. Fresh water, acid. So they're doing this, and the good news is once they get rid of all this calcite or most of it, the problem goes away, right? So there's a finite amount of calcite that they have to get rid of. So we talked about how they're mining, but there's a lot of pros to this. So they're permitted for up to 125 million pounds of production per year. They've sold their first copper in January of 2021, so this company is still very new. Their purity of copper is very good. The first one they did was 99.998%. And they expect to get to 99.999%. Looking at the value of this stock, it looks like you're going to double your money, and it's possible it could go up to like 4 times the price currently. Like we said earlier, the stock price is not corrected for the increase in the copper price, and their all-in sustaining cost of mining is $1.33 per pound. So as long as the copper price is above that, they're making money. So these are a few ways we came up with the expected stock price. So the worst case is that the price, so you can see these other copper miners are saying, hey, our share price to net asset value should be approximately equal. So if you took that for this company to calculate their value, you're looking at a 4x return on the worst case. And on the best case, you're looking at 7.8 times return. Okay, so that's one method. That's the net present value method of evaluating them. I also did an expected PE ratio method just to because these numbers seemed too high. Like this is kind of too good to be true territory. You're going to 4x your money. So I just wanted to see another method of doing it. So I said, okay, if copper goes to $4 a pound, their sustaining cost is $1.33 per pound. That's $2.77 per pound profit. And this $4 a pound copper is not a crazy estimate, right? So copper right now is $4.27. So we're already there. So for a PE ratio of 10, and so if they're producing 25 million pounds a year, which is their estimate in their feasibility study, and they're making $2.77 per pound, that's $69 million a year in profit. So a PE ratio of 10, that gives you a $690 million market cap. So that means the price should go from 62 cents to $2.50. And again, we get a 4x return. So that sort of confirms these numbers, right? And once again, over here, Excelsior in their own presentations, they're saying, hey, we're only valued at 25% of our net present value at $2.75 copper. I just showed you it's at $4.25. So these guys are, every metric is showing that they're undervalued. So I've opened up a position in this company. Right now the stock is actually down, so now's a good time to get more, to buy more. And I have a few things that I'm going to continue looking at, and I would even want to go visit their mine in person and see it for myself, just to confirm all these numbers and research I've been doing. So that's how I found a value stock in the copper mining industry. Let me know what you think. I hope other people are looking at this stock. I think it's underrated. I think it's underfollowed. I don't think many people know about it. So it was definitely an interesting find. It took a ton of work, so the spreadsheet took days to create, but it was a lot of great research and I had fun. I'm glad I found a great stock. So comment, subscribe, let me know what you think, and see you on the next video.
Alright, so that was my explanation of how I found a value stock in the copper mining sector. It's a little bit different than my first spreadsheet, just using enterprise value to EBITDA. So this one was using the resource equivalent, but you have to do a different style for this type of company because their value is not based on the earnings necessarily. It's more based on their reserves. So stay tuned for the next one. I think I might either show you a lithium miner or maybe some auto parts supplier or something else. We'll see which one I decide to show next.